There's an old stock market adage which says that so goes January, so goes the year. If that particular adage holds firm in 2019, we could well be in for a pretty good year. Remembering, of course, in particular in the fourth quarter, that global stock markets were quite comprehensively beaten up. We've come into the new year with apparently a rather different sentiment in mind, certainly in terms of the US markets. Here we are just 5 weeks into 2019 with a situation that the S&P 500 is up about 8.7%, the Dow Jones Industrial is up just over 8%, and the Nasdaq is up nearly 11% just in those 5 weeks. Of course, one of the things that has changed is that there have been some rather more positive noises coming out of the ongoing chats between the US and China, and of equal help has been a rather more dovish sentiment from the Fed. Whereas previously it was generally accepted that another 3 or 4 interest rate hikes during 2019 were pretty much nailed on, it seems now that that's rather less of a certainty in terms of that actually happening. Because, of course, this then feeds through to investors who see that the strength in the US economy will be allowed to continue to run. And let's face it, there have been very few signs that the US economy is slowing down. There was a bumper non-farm payrolls number in January, and even though that was followed by something of a downward revision, it was followed up by another one in February. At the same time, of course, the concerns that investors had about the government shutdown really affecting GDP is yet to show its face, although we have to say that with one caveat, that there is a number of economic data still to be released as a result of that shutdown. And so to the Fang stocks, that's been a bit of a mixed bag, mainly because of expectations around those stocks rather than actual performance. And it's interesting just to see where these stocks are in relation to where they were 12 months ago, because of course they had that run where the likes of Apple exceeded a market capitalization of $1 trillion. So by comparing the share price, here we are in early February 19 to where they were in early February 18, quite an interesting exercise. So we've got Facebook, which has obviously had some issues around data provision and regulatory censures. That's down 9% in those 12 months. Apple, on the other hand, is up almost 10%, although the aforementioned 1 trillion market cap is now sort of 785 billion. Amazon had a very good 12 months, up 17% the share price. Interestingly, its market cap has just overtaken Apple's and stands at 795 billion. Then we've got Netflix, which is without question the pick of the bunch. Share price up 38.5% in the last 12 months. And finally, Google's parent Alphabet also had a reasonable year, even though its results were slightly disappointing in terms of those just released. Shares over the last 12 months up 5%.